Policymakers in Beijing have now acted. Tell us a little bit of what's happening.
Okay. Well, we know that after the 2 days in a row, Yuan down 1%, 3% over 5 days. That's the kind of move that makes a central bank nervous. That could cause financial instability and more. So we'll tell you again exactly what they did. They cut the foreign exchange reserve ratio for banks to 8% from 9% starting from May 15th. And here's what the PBOC said about this move that is clearly aimed at slowing down the yuan's plunge. It's aimed at, quote, increasing banks' capabilities of foreign exchange use. They want to put more liquidity. They want to calm things down. It follows, and they said, well, follows 2 hikes in 2021 that were done to limit the yuan's rise. It was getting stronger and stronger and stronger. And so if you reduce the reserve ratio for banks to hold the domestic currency, then they won't be quite so eager to hold the foreign currency. So people say this should dampen the desire to hold dollars offshore and instead of yuan. So that's another thing they're trying to do here. But very important, it only partly reduces last year's 2 percentage point boost. So they have room to do more. I think maybe that's probably the message. If this isn't enough to kind of calm things down. People think that cutting this ratio is showing mainly that they're just not comfortable with the speed of yuan's drop. It's just, this is classic central bank action. Both Goldman and Wells Fargo saying it reverses what they've said in the past, that the yuan's rise was market driven, that expectations were perfectly stable for its value, Paul. I'm on an emergency move, but definitely something to prevent something that could have gotten worse. We'll see what happens next.